Today, we're about to rip the lid off every illusion you've had about Bitcoin, Ethereum, and the 2026 market landscape. I crunched the numbers, and I'll tell you straight, if every asset in the world becomes tokenized, some positions could see 100,000 times growth. Yes, I said it, 100,000 times. Today we break down the one-year bear market, the liquidity tsunami on the horizon, and why the crazy holders, yes, those insane crypto believers, are the ones shaping the market bottom right now. If you've ever wondered how to position yourself before the storm hits, strap in, because this is the blueprint. So I need you, the amazing viewers, kick back, get comfortable, smash the like and subscribe button. Now, let's get right into the video. Bitcoin isn't just another coin, it's designed for million-dollar territory. Experts like Elio Trades are crystal clear. Between now and 2030, Bitcoin is on a trajectory to break every ceiling you've imagined. But it's not just the 4-year cycle that matters. It's the global liquidity index, the M2 money supply, and the shifting macroeconomic winds. Central banks are pivoting, rate cuts are incoming, and $40 billion asset repurchases are just the start. The game is different this time. The only coins surviving the one-year bear market are held by holders who refuse to sell. People who've embraced the pain, and those holders, they form the bedrock of the next epic bull run. Miss this, you'll regret it. Now, let's talk altcoins, because not all coins are created equal. True altcoins, excluding Bitcoin, Ethereum, and stablecoins, have been hammered since 2021. The charts are red, the sentiment crushed. Yet this is precisely where opportunity screams the loudest. Think about it. When everyone else panics, the insane holders remain, and markets form bottoms. The key is comparison with Bitcoin. Watching altcoins against BTC exposes hidden undervalued gems and mispriced assets. Institutional players aren't paying attention yet, which means the next liquidity wave will hit them hardest, creating explosive returns for those who read the charts correctly. This is the macro meets crypto strategy that the masses miss. Macro trends are rewriting the rules. The small cap stocks, Russell 2000, ISM data, all point to an incoming risk-on environment. Compare this to previous crypto cycles, and the alignment is uncanny. Unlike the frenzy of 2021, social interest is mirroring 2016 and 2019. The market is calmer, the groundwork laid, but liquidity is set to surge. This is the perfect storm for Bitcoin, Ethereum, and altcoins to break out simultaneously. Ignore this, and you're gambling blind. Understand it, and you position yourself for maximum upside while others are still figuring out the basics. Forget old cycles. Bitcoin in 2021 crashed because interest rates were rising. Today, rates are falling and global liquidity is increasing again. The Fed is back in stimulus mode. $40 billion in asset repurchases? Check. Rates heading to zero under Kevin Hassett? Check. The macro setup has flipped completely. This isn't a repeat of 2021. It's the opposite. And history shows assets like Bitcoin thrive under exactly these conditions. If you're holding, you're on the right side of history. If you're not, you're watching opportunity evaporate in real time. Short-term noise, government shutdowns, political chaos, they'll create volatility, sure, but Bitcoin's floor is much higher than most expect. Bear markets typically end near the 200-week moving average around $55,000. That's your tactical reference point. Meanwhile, the 50-week moving average at approximately $103,000 is your early resistance for trimming or reallocating positions. Smart traders use these zones to consolidate, to shift capital from weaker plays into stronger, long-term positions. This is the housekeeping zone, where profits are secured, positions optimized, and the portfolio prepped for the next big move. Timing is everything. Stimulus-driven spikes have been Bitcoin's pattern over the last 4 years. Banking crises, ETF announcements, Trump's crypto signals, these weren't random. They were catalysts for one-time high-impact moves. Traditional liquidity wasn't enough to fuel Bitcoin's rise, but now the macro environment has permanently changed. Stimulus is flowing, central banks are accommodating, and AI-driven economic shifts are adding unprecedented demand for digital assets. Every macro signal aligns with growth, not collapse. The market is poised to reward prepared holders and punish passive spectators. Let's break it down. Why Bitcoin? It's a debasement hedge. a macro asset designed to thrive as liquidity rises. Over the last 4 years, the global money supply was constricted, yet Bitcoin still climbed, responding to selective liquidity injections. 2023's banking crisis, immediate Bitcoin pump. ETF approvals and launches, major price catalysts. Political narratives, including potential crypto-friendly leadership, emotional yet measurable market influence. Understand this, and you see that Bitcoin isn't random. It's mathematically and emotionally primed for its next leg up. Ethereum and altcoins deserve your attention. While Bitcoin remains the fortress, altcoins are where leveraged growth can occur. Ethereum is more institutional than altcoin, but it still benefits from network growth, staking, and DeFi adoption. Real altcoins are down massively, creating asymmetric risk-reward profiles for those willing to endure volatility. Combine macro liquidity, post-bear consolidation, and investor fatigue, and these coins are primed for explosive relative performance. Ignoring them now is leaving potential 3x, 5x, even 10x returns on the table. Now, the million-dollar question: how would you allocate $10,000 today? 6 to 7,000 in Bitcoin for safety, of course. Add exposure to industry-correlated equities like Coinbase and MicroStrategy. Why? Because these act as leverage to crypto's moves while offering slight portfolio diversification. MicroStrategy, once feared for selling Bitcoin, now shows resilience under pressure, a signal the market no longer reacts to headline FUD. This is a tactical way to ride macro-driven Bitcoin movements while capturing institutional flow. Risk management isn't boring. It's high-stakes survival strategy. Consolidate weak positions, hold on to the winners, and maintain cash reserves to exploit liquidity events. This housekeeping isn't casual advice. It's how professionals mitigate downside while positioning for explosive upside. Use yearly opens, moving averages, and macro shifts as your decision framework. Play this smart, and you maximize returns while others scramble blindly. Let's talk timelines. Bitcoin is designed to hit $1 million by 2030. It won't be linear. It will spike, dip, consolidate, but the trajectory is intact. Forget the low time preference myth of early 2018. Today's market requires flexibility in timing, but certainty in logic. Liquidity is returning, altcoins are depressed, macro conditions are favorable. If you're thinking decades ahead, positioning now is non-negotiable. Ethereum and altcoins will follow, outpacing expectations. Many underestimate the cumulative effect of macro liquidity, institutional inflows, and decentralized adoption. The market is smarter now. Ethereum's staking yields, network growth, and layer 2 expansion are quietly setting up multiple multi-year bull cycles. Don't wait for hype. Act on metrics. Patience compounded with conviction is the formula for extraordinary returns. Finally, don't just watch. Position. The liquidity wave is coming. The macro setup is historic. And the market's emotional psychology is bottoming. Crazy holders are forming the floor. Smart reallocations are forming the base. And institutional attention is creeping in. This is not a drill. Every measure shows alignment for a generational opportunity. Play aggressively, but play smart, because 2026 and beyond are shaping up to redefine wealth in crypto forever. The takeaway is simple. Hold, position, and anticipate. Bitcoin, Ethereum, altcoins, and crypto-adjacent equities are converging into a perfect macro stimulus storm. Don't rely on old 4-year cycles. They're history. Rely on math, liquidity, and global macro alignment. If you internalize this roadmap, 2026 won't just be another year. It'll be your opportunity to rewrite your financial trajectory. The market isn't waiting, and neither should you.